Hello everyone and welcome to the channel. My name is Brent, and in today's video we're going to go ahead and do a deep dive into our total stock market portfolio. We're going to go ahead and take a look at each individual company that we hold, each ETF, and how much cash we currently have to invest within our stock market portfolio. So right now, stock market is essentially at all-time high. So I want to go ahead and record just a quick video going over each portfolio, how it is currently set up to invest, and also just how much dividends that we receive from our total stock market portfolio. Now, it really depends on your investments, just how much dividends you receive as an investor. So I do not myself like to slow my growth just for the dividends alone. So I definitely aim more for growth as well as having some dividends for the cash flow within the portfolio to kind of make up during those times where the market trends sideways for a while. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video. Helps out the channel, helps out this video, lets others see it as well. If they're interested in seeing a stock market portfolio kind of diversified in different areas. So let's go ahead and get into the video. Thursday overall was slightly negative, but it was much better. Positive, it started off negative, but kind of worked its way a little bit positive. We'll kind of take a look at that just really quickly. Here on Thursday, stock market here, S&P finished down 0.86, but when I see here on Thursday, big drop there on the early morning, but it picked it back up by midday. It had already recovered half of it. It did kind of trend a little bit lower through mid, but it closed off those lows. So it's pretty positive there. Same thing with the Dow Jones, down 0.75 on the day. On Thursday for the NASDAQ, down 0.72, but we can see here it all started pretty negative in the early mornings. The Dow Jones was down over 300 points in the morning, and then picked it back up where they were only down 260 points by close. So overall, I'm not at all scared of where the market's at right now. I did invest, what I feel kind of heavy not too long ago in VTI. I bought 100 shares, but I'm definitely not putting everything into the market, which we'll kind of cover here as we go through the portfolios. We'll go ahead and talk about the individual stocks, the ETFs, and the cash that we have available to invest here going forward from July on. Now, jumping over into Seeking Alpha, this is where I take a quick look at all of our portfolios really quickly. I have all of our portfolios, my wife's and my portfolios, all within here. Quick and easy. That allows us to quickly see what our portfolio is at. So right now, our portfolio overall is sitting at $219,955. Here, today's market, we were down 0.77%. That puts us at a total loss for the day of $1,099. So every week on my own, I keep track of where my portfolio is at. I keep track of how much I'm investing on a weekly basis, and also where my total value is at. So every week I take my total value, remove how much I invested in that week, take the difference between where it's currently at and where it was at. And that's usually my weekly change that I kind of keep track of just for myself to see how our total investments are doing across the board. Now we're going to go ahead and kick it off by taking a look at my own stock market portfolios, and then we'll go ahead and move into my wife's down towards the bottom. So kicking it off with Merrill Edge, this portfolio is an IRA. This started off as a rollover, a 401k from my old, my old employer. So I forgot how much it had started with. I think it started with 8,000 or 9,000. Rolled it over, and at the time I forgot what it had been invested in, but I was losing quite a bit. Every quarter I was getting hit with fees after fees and management fees and all sorts of fees. So as soon as I could, I rolled it over into an IRA, and I sold out of whatever holdings I had in there. I've been using my IRA and my Roth IRA to kind of swing trade out of different investments. But for the longest time, you can see we've kind of held Apple for a while. So Apple is one of my holdings, 42 shares in there. It's up roughly 18%. Number two is Abbott Laboratories. We have 9 shares of Abbott Laboratories. We do have First Horizon Corporation. This is one I bought not too long ago. I bought 100 shares Went ahead and did a covered call for $17. It is down at $16.13. That's completely fine. I'm in this one just because I believe in its financials. So whether it goes down, that's completely fine. I'm going to continue to write some covered calls on this one, collecting the premium and, maybe averaging down on it at the same time. I have $541.66 sitting in this account. And then here down towards the bottom, this is the account I hold some Tattooed Chef in. So I do hold 200 shares of Tattooed Chef, and this one is up roughly 21%. So this portfolio overall is sitting with all the holdings and the cash in there a little above 13,000. So 13,233. So that is the Merrill Edge IRA. Inside of our Roth IRA over at Merrill Edge, this is a smaller, it's still 13,000. I still haven't invested my $6,000 for 2021. So that's something I'm going to actually be depositing into my Merrill Edge account. So this account will grow here by $6,000 by the remainder of 2021. Here, this is where I purchased Kimberly-Clark. Just recently, I started buying Kimberly-Clark at my cost basis is $132. They're currently priced at $135. They are down for the day, but overall, this one is up 2.27. It pays a nice 3% starting yield and above, and I have a little over 3,500 of that one. VTI is the other ETF that I'm invested in here. I hold 44 shares of VTI. This is the Roth IRA. So I actually rolled over my M1 Finance Roth IRA over to Merrill Edge. I made a video on that not too long ago. Within a week, my M1 Finance account, my Roth IRA, had been completely transferred over. So that VTI position is now inside of my Roth IRA here on Merrill Edge. When I do deposit that $6,000 into the Roth IRA, I will more than likely just deposit it towards VTI and let that be done and over with. Down into my taxable account, I do have a taxable account over at Merrill Edge. This is an account I recently started. So here I have 100 shares of VTI, 100.30. So I did receive some dividends here shortly and completely reinvested in there using the DRIP dividend reinvestment program. So this holding is sitting at $22,385. Now I do have a covered call. So here I wrote a covered call on a video here not too long ago. I wrote a covered call for 225. If it hit 225, which I kind of put it up there because I feel in the less range, 220, I knew for a fact that would more than likely win the money. So I went ahead and shot for 225. If it hit 225 and over, I'd be completely fine with selling out of it. I believe that the market here in the short term, I saw the VIX was kind of spiking for the first time in quite a while. So I think there's going to be some volatility here in the market in the upcoming weeks and months where I may have a better opportunity to kind of slowly dollar cost average building my VTI position up. So here my cost is 220. It's currently priced at 223. I also did a put. So I sold a put on VTI for 215. So if it does come down to 215, that is underneath my cost basis of 220. I'll buy another 100 shares, which I'm completely comfortable with buying 100 shares of VTI at 215. That'll lower my cost basis on VTI. That's going to grow my position. I want to get that position very large. That'll be my primary target within my taxable account. I don't want to be doing a whole lot inside of my taxable account besides just kind of the total stock market account. So more than likely my taxable account will only be focused on VTI. And I also do have some cash. I have $78,000 sitting in cash in that account. So I'm not investing it all at once in that account. That one, I'm just kind of going at it kind of slow and easy and dollar cost averaging over the next few, weeks or months, depending on where the market's at. I would really like, a big decrease to happen here in the market. That'll give me the opportunity to kind of invest a bit more. We have calls and puts regardless of what the market does here in the short term and collecting some premium along the way. Moving down into our Roth 401k. Now, I've been at my work for a little over, 3 or so years. I don't think I had my Roth 401k with me my very first year. It wasn't until I started getting into my second year where I was able to sign up for my Roth 401k. So this one has a little over 31,000. $31,629. Here, I'm just invested in a Vanguard Institutional Index Fund. This is it's basically just a large cap blend. So there's a growth fund. This one is has Apple, Google, Amazon, and many of those other large market cap companies. So nothing crazy there. Kind of similar to VTI in a way. So this one just kind of been invested in for a while. It's up 24.26% there on that position. And that is all I invest in within that portfolio. Next, we have my thrift savings plan. This is one that I'm currently working on getting rolled over to my Merrill Edge account. So my TSP will roll over into my IRA. And here, we're not actually invested in VU, but the way that I track it within here, so if you have ever been in the military service, you have different funds that you're able to invest in. You have like a G fund, which is bonds. You have a C fund, which is your S&P 500. You have an S fund, which is your NASDAQ. So in my case, I'm invested in the C fund, which tracks the S&P 500 performance. So all I did for that account was just take the current value of it. I did some math there, so it worked out to be the same value, and that's kind of what I was focused on. I don't know what my actual total return has been. I started the account sometime in the military. I wasn't very smart about putting it away into my thrift savings plan while I was in the military. We also didn't have a match when I was in the military, so I didn't end up putting a lot in my thrift savings plan while I was active. I had actually put more into my savings, which at the time, if I can go back, back in 2004 when I went active, I would kickstart my TSP. I would have definitely put more into the market at that time. I got enlisted in 2004, started on my TSP. That would have been the best time. Who cares about the financial crisis? I was in the military, so it didn't matter. I had a guaranteed check coming into me every few weeks. I had to pay for nothing to live, no food, no anything. I had only 2 bills, which was my cell phone and my internet. Everything else was paid for. That would have been the best time to be 100% into the market, buying up everything. If I can go back and change one thing, that would be it right there. So that is my TSP. The total change doesn't matter on that one just because I don't really know what the total change has been. And my last account here is my Webull account. I set up, if you guys are interested in getting 2 free stocks with Webull, you can go down in the description below, sign up for Webull. You'll get 2 free stocks valued up to $2,300. But here, I went ahead and signed up for Webull. It's just a taxable account. I do have 3 holdings. My primary holding that I'm invested in there is called Kratos Defense and Security Solutions. It's a really cool defensive satellite, tech satellite defensive company. I think it's really interesting. And this one's been kind of waving around that $26, $27 range for quite a while. That's my primary investment within this account. It's at 5.47%. These other positions, Antero and Cemex, these are 2 free companies that I recently received for someone signed up through one of my referral links. So one of my friends, viewers, subscribers, thank you guys, signed up for Webull using the links down and below, and they were able to receive a few shares. I was able to receive a few shares, and these are up positive. I will more than likely sell out of these positions at short-term capital gains and move the funds into Kronos here. I may overall Kronos. I may overall just sell out of this account overall from my Webull account and move the capital over into my Merrill Edge account. Just having the option there for people to sign up for different platforms, depending on what type of investor they are. Are they a long-term investor? They get kind of emotional about their investments and want to sell right away. M1 Finance is probably the best bet because they don't let you sell or buy when you want. They allow you to be fractionally invested. They allow you to dollar cost average. You have a long-term outlook on there. You can set it and forget it with ETFs. Whereas Webull, if you are intermediate in the market, you kind of know your thing. Webull's a pretty good platform too, but I definitely wouldn't recommend them over, say, Fidelity or Merrill Edge. So Webull is there as an option besides M1 Finance. So those are my accounts. Now, diving into my wife's IRA, she has hers over at Fidelity. She holds VU. You know, she has 19.71 shares of VU. That is valued at $7,800 over at Fidelity. Her Roth IRA at Fidelity, these are all rollover accounts. So she rolled over an IRA work plan, or a 401k, and a 403b, I believe, is what rolled over to a Roth IRA. So here, this rolled over and we rolled it into VU. So she holds 6.72 shares with Fidelity here as well. And then her Roth IRA account, that's the one that's kind of public that we've always been tracking since back in early 2018. This one here has 32 holdings. This stock right here has the most holdings. As you can tell, our other positions, let's go ahead and expand it everything. Our other portfolios do not have a lot in them. Majority of them just have the total stock market fund there. Besides the IRA, that one just kind of invested in Apple, Abbott, and a few others. But for the most part, I think VTI or VU are the most invested into. And yeah, that's pretty much how we're going to go ahead and continue investing. Our Roth IRA is probably the most managed one just because it has the most holdings. I like to kind of, it's one of those fun accounts. You know, I have a lot of fun researching individual stocks. It's not going to be playing such as an important role. You know, this portfolio is 34,000. So in the grand scheme of things, it makes up, you know, a smaller piece of the total pie of our total portfolios. And especially as I start to invest more into VTI, I'm really hoping that the market dips here in the future, just so I have the opportunity to continue averaging into the market. So that is it as far as our total portfolios. In our next part, we're going to go ahead and jump into just how much these holdings pay us out in dividends every single year. So here for this, we're going to go be using trackyourdividends.com. So our portfolio within here is showing 140,000. That is because over on the Seeking Alpha, we have different portfolios. Each of these portfolios have cash in them. The IRA has 541. This one has $47. Our taxable account, we're continuing to want a dollar cost average in. That has $78,000 to invest, you know, as of today. So that is why this is not showing the same amount here. Some of this value right here is actually in cash, which we are waiting to invest. You know, we're kind of dollar cost averaging very slowly. I bought a chunk of VTI, 100 shares. I put in calls, I put in puts. If it falls, I will buy 100 shares more and continue to do that as the market falls. If it doesn't fall, I will probably end up buying another 100 shares in a bit. But at the moment, with the volatility right now, I do think that my chances of being able to buy VTI at 215 is greater versus having to buy it at 230 or higher. So just kind of working it out that way. So currently, if you were to take the capital and invest into these same holdings, you would get roughly a starting yield of 1.68, which is fairly low. You know, even my yield on cost of 1.95 is fairly low, but that is because our portfolios are, again, mostly focused on growth. We hold a lot of VTI, we hold a lot of VU, we hold a lot of just funds that track the S&P 500 overall. Based off our currently invested capital, we have an annual income of $2,371. So that is not very much overall. So, you know, worst case scenario, you know, we wouldn't have that much to live off of right away. But again, we're not focused on income at this moment. My wife and I are in our 30s. We have quite a ways to go up until we retire. We're really focused on building up our stock market equity within our portfolios. That way, when we do go to need to move into some higher yields or some, you know, I've seen JEPI being thrown out there a lot, or NUSI, those high yield, low volatility funds where you just kind of invest, you get anywhere from an 8 to 12% yield. And then you can collect your cash flow. Right now, I'm trying to build up that $1 million portfolio just in stocks, $1 million portfolio in real estate, and so on. So definitely some goals there to hit here along the way. Now, as far as diversification, if we go ahead and click on that link here, we can see how our portfolio is currently diversified. So VU, VTI, the VIIX, which is my Roth 401k. This in itself nearly makes up 75% of my portfolio. This little 25, 30% of my portfolio are those individual holdings. And my biggest individual holding is Apple, and that has a little over $5,000 invested in it, and that's only 5%. So I don't go more than 5% in any one individual company. I don't mind buying up more than, obviously 5% in ETF or fund. So I have had a couple comments over that in the past. I see a lot of individual holdings. Are you invested in any ETFs? Yes, the majority of our portfolios, just to make it easy, are in ETFs that track the S&P 500. And then we kind of pick and choose different holdings that may help us, grow a bit more, have a higher return while still being able to capture dividends along the way. So that is kind of how each portfolio is structured. M1 Finance portfolio is structured to have the growth of the S&P 500 while getting some of that growth from dividend payouts and being able to buy back more shares. Together, they kind of all work out really well. And we can go ahead and see here, our largest is VTI. Our smallest is Colgate, which we just kind of started there, and is from Altria. Our largest income is from our Roth 401k at $412. So that is basically it for this video. We went ahead and covered our total stock market portfolios, what we're currently invested in, how much our stock market portfolios currently make in dividends on an annual basis, and just how are we diversified. Most of our portfolios are again in funds and ETFs, which track the S&P 500. I think that all investors should be primarily focused this way, depending on how much capital you have to invest. Usually if I'm working with my friends, family, coworkers and such, and they're looking to get started, I will say right away, just buy and start dollar cost averaging into the S&P 500 or the total stock market fund, VIW or VTI. Regardless of where you are starting at, whether the stock market's at high or low, in the next 5-10 years, it's not going to matter where you bought today, because in the future, it'll more than likely, generally 100% chance, it'll be higher than where it's at today. So you're not investing for where the price is at today, this week, this month, or this year. You're investing where the stock market will be when you retire, which, for most of us isn't for another 10, 20, 30 years away. And even then, that's still when you retire. That's not when you're going to be pulling all your funds out of the stock market accounts and calling it quits. It's still going to be invested in there throughout your retirement. You're going to be invested in different stocks, funds, ETFs, dividend, investing platforms. So you're not done once you retire. It's still going to be invested for the long run. So focus in the future and not here in the present. So that is going to be it for this video. Let me know down in the comment section below if you have any comments or questions. If you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video. And of course, give this video a thumbs up, make it blue, and I will see you guys in the next video. Thank you. Bye-bye.